The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Still Russia, Moscow in the news. Got a lot of things that are being affected by that, to say the least. A lot of currencies really up in the air right now. Talked yesterday and got, the big thing today is probably the CPI at 8:30. Then we got the Fed stuff going on this afternoon. So if we can get past the CPI, I think there's going to be a lot of adjustment of positions going into that Fed talk thing this afternoon. So let's take a look at the euro. And what I wanted to do here was kind of point out those weekly unfair lows that we talked about yesterday, 125.74, and we talked about a gift that it had gravitated even back up into that inflection point. We reached a high of 125.69. So again, 5 pips away from that target where was the shorting opportunity. You've got to be willing to take some risk around those inflection points. And this is the kind of thing that, we're in a big downtrend. Obviously, this has been a currency that's kind of been the gift that keeps on giving. I feel like this thing's going to head lower into 120. And when we get those types of rallies into those types of inflection points where you can pick a battle, they don't always work out, but they're at least the greatest waiting area, in my opinion. If we go higher on trades like that, just to do a little bit of education, you've got to be willing to kind of stop yourself out, because the next stop could be based on, and we talked about the dual confirmation actually getting even back below 125.07 yesterday to really kind of be able to step on the gas pedal on the short side. But you've got to be willing to kind of, say uncle above those weekly unfair lows and just kind of be patient and wait and see what the market's going to do at that point, because at that point you really don't have the leverage or the edge that was presented to you around that particular high probability area. Remember, when we get back into these, and you can look at it this way, when we get back into these fair auctions and you get back into these kind of meaty parts of the bell curve on a long-term basis, you got to be almost willing to tell yourself that, hey, we're kind of getting back into an area where I don't have an edge. There's no probabilities up in here, and we've got to kind of let things kind of gyrate around in these meaty parts of the bell curve and, kind of figure out what's going to happen. And if we can get away from there into these outlying areas outside of those standard deviations away from the mean, remember this particular blue line is the mode of that meaty part of the bell curve, I guess in layman's terms. And when we get it back out of there, then price action should be able to kind of move a little quicker. And as a trader, you always want to try to compress your time frames when you're in the market and try to maximize the time that you are in the market. And that's kind of what we're looking at here. So that worked out quite well. They don't always work out well, but those are the kind of things you kind of like lick your lips and get a little happy. I also talked about the Australian dollar. Okay, just reading some things in the den there. We talked about this, probably getting the crap kicked out of it down into sub 80. And this has been really, again, one of the kind of easier plays here. And that 82.56 area we talked about yesterday, kind of leveraging off of there and heading south, hopefully, just like the euro. Here's the weekly situation on the Australian dollar. Again, giving you some really good opportunities previously last month, or over a month ago, actually, going back and retesting those weekly unfair lows. We've talked about this. I'm not going to bore the heck out of you here. But, again, I think the targets are sub 80 on this. I think the Australian government, we're not going to go in a straight line, obviously, but the Australian government is not unhappy about that happening. So, again, you've got an Australian government central bank that's going to come out and probably be on your side on that trade. Just like some of these trades, it's just, I've never in my life as a trader seen, no trade's easy, but it's just been amazing times where they basically project what they want, tell you what they're going to do to make that happen, and you, at the very least, you cannot fight those arguments or opportunities, I guess. So, whew. All right, so taking a look at the yen, we kind of got the yen a little bit farther away from where I wanted it to go. Here's that weekly again, and the reason I'm kind of talking about the same things here because, and we're going to get into some individual stocks, but some of these instruments are so in play, you almost have to just focus on them for a while. That weekly got a new box trying to appear at the end of the week. Hopefully, we'll have some new inflection points on the yen for the first time since down in 106.14 on the weekly. As you can see here, as we got that leverage off that 105.44 previous profile high. We talked about that, but we may have some new inflection points in the long term here. And our scanner, by the way, is pointing out all these inflection points for you. So as I go into the currencies, I got to clear that out because I had another sector of instruments in there. Let me select none and let me go back to currencies here. Okay, so again, by the way, we put the Russian ruble in here yesterday. We should have. I told somebody to do that. Oh, there it is. And yeah, here's the inflection points on the ruble as we see them right now. So again, massive green there. The ruble getting devalued. Actually, the ruble across the USD is going to be opposite in the. It's going to look like the ruble's getting major valuation, but it's actually devaluation. But let's take a look at the Australian dollar. There we go. Here's the inflection points we just spoke of. 82.56, as you see the bottom of the box on the daily there. All these are kind of predetermined and put right out in the forefront for you on the scanner. So, okay, let me get that out of the way. Okay, so the Japanese yen, and by the way, there's the Japanese yen. That's the reason I pulled this up. There's that new box attempting to appear right there. And as you can see, we're below profiles on the daily. I'd like to see that get back above that 118.08. And as you can see, bottom down there, we can see that price, 118.08. And that's kind of the okay point, actually. And let me get this into space here so I can see it. And as we look at this, just to make a quick comment about the scanner again, if I wanted to see, and this is not a big group, it's not like you can't just scan your eyes over this, but if I want to see weekly on the currencies, new box attempting to appear, it's going to show me those. And if I don't want to see only matching results, it's going to put those right at the top there so I can deal with them. All right, so those are the things that are relatively bearish. If you've watched some of our videos, you'll see that when I see these yellow grids starting to happen, these yellow cells, that's an indicator in itself. It's also a warning sign, but it's an indicator in itself that new supply may be coming online for that instrument, either above or below. All right, so those are the types of things this is basically things that I wanted to see when I trade, is kind of how this thing was patterned after. And, what we always love to here is we love to get comments from users or potential users on things that they want to see in this particular product. And that means, how many more ways can you filter it? How many more instruments can we put in? Do we want to put specific ETFs with their components as breadth instruments? We are exploring quite a bit with this product right now, but we love to get feedback, and we always try to accommodate people if it's something we feel that especially the crowd will enjoy, and not just one individual person. So nifty little tool, and we'll talk about the breadth in a second as it relates to some of the indices. But let's take a look at the Japanese yen. So as the scanner told us, we were below profiles here. We had kind of, and I'm going to kind of drag this out if I can get my charts to work here. drag this out a little bit and see that we had the close below on the end, below that 118.08. That was kind of Custer's last stance on the intermediate. Went back and retested it. Remember, former support, now resistance. Those are super powerful trades, and we didn't know the ruble was just going to come apart at the seams, so we kind of got some downside help here. I've been actually passing on shorts on the yen. I just feel like, again, we got a central bank that's gone ahead and told everyone they want the yen to go into devaluation mode, and their economy sucks, and a couple other things going on. I just don't feel good going long the yen or thinking that the yen will become a value added instrument again. So I had a question here about the breadth of the scanner. Rip, I'm going to answer that when we get into analyzing the S&Ps and the Shanghai relative to the breadth. So if you'll sit tight for that, and maybe even remind me, because my brain cells are not as voluminous as they used to. Maybe remind me about that when we get into looking at some of the indices. So again, we talked about the Aussie dollar, the yen, the euro. It's kind of laid off the British pound lately because it's just a little bit more isolated than what the ruble is affecting over time here. And the British pound's been, as we've been kind of talking about it, pairing some of the words by Garrett Morris on Saturday Night Live, been very, very good to me. So we've had opportunities on the pound, but it was kind of going into a kind of a balanced state down here, if you can see. And we talk about, are we a balanced market? Are we imbalanced? So we're kind of balanced in the long term here, and the pound's a little bit different animal than the euro, and so we're going to kind of just opt out unless somebody wants me to kind of look at the pound there. So the euro, the ruble. We talked yesterday about this thing probably has seen at least the near-term highs around that 80 mark. And, we also talked about a little bit of a conspiracy theory that maybe Putin was going to make some statements and some oligarchs were going to be able to take the hedges off early. Dismantle some of their hedges and being able to, recoup some of the losses by undoing some of the hedges up top. I have no idea if that's true. It was just kind of a passing thought, but I can't put anything past some of the things that happen in Russia. It's a different landscape for business for sure. And Eddie, who was on yesterday, really he blows my mind all the time. He doesn't talk about all the things that happen over there, but he spends weeks and months at a time literally right in the heart of Moscow with some of the guys in the know there, and it's nice to be able to bounce things off him when it comes to the ruble. We'll be right back, folks. Got a lot to cover today, and see you in a little bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys. We had talked yesterday a little bit about the ruble, and probably seeing the at least near-term highs and maybe some, kind of people having to rebalance some equations here. And again, that was just, in my opinion, just a big squeeze after they made an attempt to do what they were going to do with the rate situation. I just, think that that was kind of a gut feeling. It had not a lot of technical things surrounding it. But I just want to look at the 240s again on the ruble. And I have some friends at FXCM in Hong Kong. Actually, one of my really good friends in the Philippines, his son is actually the director of currency trading for FXCM in Hong Kong. And, they came out with an announcement. I actually saw it on CNBC yesterday after I had talked to these guys back there that they had, basically said, no more trading on the ruble right now because they really – it's a situation that's kind of getting out of hand as far as margin requirements and things like that. So I don't know if that's still in force. I'm assuming it's still in force. So, but if you can trade, the ruble maybe at another currency house, these 240s have been very, very powerful. On the long term, we have no new information to trade the ruble USD, but here we go. We took this, this is kind of a situation where you got to kind of wait patiently when there's nothing to key off of in the ether up here, as we were calling it yesterday. It's better just to kind of sit on the sidelines and let somebody else, roll the dice on some of those trades. But you had a chance this morning by the current profile structure, 60.95. Kind of bounced almost, 60 is where we went down to. So again, anytime where you start breaking down below 240s, which has regulated this trade up for a long time, folks, and we talked about that yesterday. We talked about, the weekly takes precedence over daily, over 240, over 60, over 30, 15 down the line. But as you're in a trade, this could be a take on, if you're on the long side based on some technicals, these 240s, in my opinion, it may be a little bit too much give and take for some folks, but the 240s, in my opinion, really allow me to regulate a long or a short relatively proper. And anytime we're going to get back below 58.43, that's going to be the total uncle point on the long trade for the ruble for a while. But you've got an inflection point at 60.95, and it's not a bad place to pick battles around those inflection points as you're trying to keep the long trade on here. And let the market come to you, I guess, is the premise a lot of times of what I'm saying. So as we finished up with that, let's just kind of last thing here. Let's take a look at the dollar, how that's being affected. Again, here's that dollar index, possible new profile attempting to appear here. And this is the March contract. Here's the intermediate. That powerful inflection point, we're back above now, again, 88.37, okay? We're back above. Again, I'm a bigger fan of going long to dollar these days than going short to dollar. And as we had spoken yesterday, we kind of had to say uncle below there, but now we're back above. And in my opinion, you've got some valid reasons. And here's the 240 on the dollar. You've got some valid reasons to kind of get back into that trade. Looks like the yen and the ruble may kind of settle out here a little bit. The dollar may just become, again, a safety play in the least. So, again, we've covered some of the currencies that we normally look at. And, again, we're covering some of the usual suspects of that world because there's so many great opportunities, in my opinion, looking across that particular landscape. Let's take one look right now at the FTSE. This is the March contract. Just make sure I've got that right. Yeah. Sitting, well below profiles in the weekly, but had a new profile appear on the FTSE, so the inflection points to pay attention to, and these are the FTSE futures, FTSE 100 futures, 61.31 on the bottom and 63.84 on the top. So, again, on the short term, this is a little noisy right now, but on the intermediate term, I feel like those are kind of, you're right in the middle of that range. I'm probably going to be a buyer based on the 61.31 inflection point and a seller at 63.84 inflection point. Excuse me. And this is one of the things that, just going to have to wait and see on the FTSE. So we'll come back and cover a couple other things that are globally being affected by the ruble and the gas situation we're going to talk about. So we'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and talked a lot about the currencies and got the CPI that's come out. Let me see here. Let me just check the notes. These are real-time quotes here, and not a lot of reaction here. So am I getting quotes here? Is that right? Huh. Okay, I have to come back on that. The CME may be having a little bit of problems here to disseminate quotes to these signals. Says I'm online here. We're going to come back to that. Oh, that's weird. Yeah, okay, here we go. We're getting quotes. Okay. All right, so we talked yesterday. Excuse me for that brain block here. 1968, we talked about that being an important number, and somebody earlier had, that somebody saying it didn't react much. I would say that it didn't react to the point that I thought I wasn't getting quotes. So let's answer the question about the breadth here, and let me just kind of clear the deck and just focus on the breadth here. All right, so these dials are a function, basically, it's a little math equation of basically showing you whether we're negative or positive breadth. And here's a little speedometer. And by the way, we're putting some mouse overs now to show you the middle ground, which will be a percentage also, which kind of plays into things. And we've got that expanding and contracting, as you can see in the dial. So the weekly, even as of the market not opening this morning, I feel like we're going to open a little bit higher, is still positive. And the daily's been negative since the 9th, 10th. So I'm going to pull this up, and this is just for educational purposes. I'm going to go to my daily. This is our admin terminal that we use for back testing, and I've got a whole slew of cool stuff we're getting ready to come out with as far as signals from breadth mixed with our former strategies. I've been talking to TFNN about this, and I think you guys are going to really enjoy being able to possibly get some of these signals. But here we go. Like December 9th, December 10th, we crossed daily breadth negative, and that means that the amount of stocks trading below the S&P 500 profiles, below their profiles within the S&P 500, eclipsed the amount of stocks that are trading above their profiles within the S&P 500. So that's kind of what that means. Now on a daily, there's a couple of things to take in consideration here, and I'm going to go back to our daily chart. Here's the daily situation, and there's the 10th, and there's the 9th. So as this kind of migrated into negative breadth on the daily, this is going to be a little bit longer conversation you probably want, but I just want to get all this in. That means that it was okay to sell inflection points on an intermediate basis. And there's two things going on here that you really kind of need to get your arms around. We had, a pretty violent pullback immediately, all right? And the weeklies, since we were relatively, strong positive breadth on our long-term weeklies, being this, that snapback and this turning negative on a long-term basis, the weeklies are more of a smoothing agent, right? So we still have stocks relatively positive breadth in the long run, and if you kind of just step back and really kind of picture what's going on here, we had this ruble situation, which is a huge fundamental event. But when you step back and look at this, and I'm just, this is no mystery to anybody. Got a bad tick down there. We're, 2 or 3% off all-time highs here, and we don't have any technical damage. We kind of leveraged off this 14.50 the other day on the short side, and then we just kind of have been super volatile based on what's going on. But this is kind of Custer's last stance, especially for a close here, being this new cool weekly profile that's been emitted at the beginning of the week, and that number is 1968. So the neat thing is on a long-term basis, I think the long-term trend is still intact up. As much as I think a lot of this is a shell game, just my own personal thoughts on the market going higher and how this is ultimately going to end terribly because of what the Fed's doing and not allowing a free marketplace to really happen. We've got to just basically look at what we're presented. That's kind of one of those things where you can't step in their way, just like the Japanese situation we talked about, just like the Australian situation we talked about. The long-term trend is still intact on the north side, and that leverage point, 1968 on the March contract, is sitting there, and we cannot ignore it. And the breadth on the long-term basis is still, in a very smidgety kind of way, still positive. All right, so that means that most of this, there's more stocks in the S&P 500 trading above profiles than there is trading below profiles, and the middle ground is not exaggerated really that bad here. And I'm going to give you that middle ground number here. Let's see, 44. So, we're either in a balance to upside marketplace still on a long-term basis, and looking at it in that light, you got to try to take shots at these major inflection points. And I don't know if I explained, the answer to the question very well there, but that's how you determine when you're changing from positive to negative breadth. You basically get this scanner, and I'm trying to look back at the original question because sometimes I go off in left field, and the answer may not be the answer to the question that I'm explaining. But you want to look at these dials. We try to make this as easy as humanly possible. And, this obviously predicates this most of the time. But if it's a relatively sane marketplace, the weeklies are, in a normal trading environment, the weeklies are super, super powerful. You can't ignore some of these other crossovers on these other time frames, as we didn't ignore a daily trading opportunity off the 2052 area, the 2059 area on the December contract, the 2052 area on the March contract. And we kind of got that gift on the 11th because, remember, daily breadth was negative, and we came back and kissed the inflection point for maximum leverage there. All right? So that's kind of the way that works. If there's any more questions on the breadth in general, this is a feature that I know no one else is disseminating. I'm giving a huge, in front of about 500 institutional investors or Bloomberg terminal users, basically on January 29th in New York at the Bloomberg building up on Lexington Avenue in Manhattan on the 29th. If you guys, I don't know if non-Bloomberg users can go into that, but again, if you want another webinar that kind of strictly focuses on breadth in general and how to utilize this, email TFNN and let's set something else up, because I'm pretty proud of this, and I think it's a very useful tool when it comes to trading indices. Now, on that same note, we talked about this. We talked about the Shanghai. And there's the breadth on the Shanghai right now. But we talked about the other day, and I want to pull this up as a little bit of an example. We talked about, here's the weekly on the Shanghai, and we had like almost a 10% range in one day. Let me just pull up the daily. 10% range in one day, but we had a profile appear down below. This was, without question, numbers that we emitted in the scanner that you can get in the scanner by going in here and choosing, we've got the Shanghai in the future section here, and you'll see the Shanghai, excuse me, let me get that in the right section, guys. But the Shanghai breadth, the Shanghai breadth was staying positive pretty much across the board, especially very positive on the weekly. So when we had these pullbacks and we had the daily box appear well below price action, and I talked about this, I said I don't think this is over for the Shanghai on the north side. So this is kind of almost a healthy profit-taking situation, and we were able to look at this from a buy support kind of situation, and there's the support on the 240 regulating, again, the long trade up. And these inflection points, again, were provided on the scanner, and I got to get Michael on the next break. I'm going to get him to put that in the right section here. I'm just going to make a note to him to do that, so we'll have it up after the next break in the right section. So, again, that's the kind of, breadth guidance tool that the scanner, which is really two components, is the breadth information, which is the summation of a lot of the instruments that we have in there categorized properly, and the ability to scan and filter instruments, over 2,500 instruments in there. So, again, that's the situation on the breadth. Don't have a lot of time to go into the serious depths of it, but let's take a look at the NASDAQ just to give some numbers here. Alternatively, the NASDAQ 4120 has kind of migrated down below that long-term breadth. So I'm definitely sitting on the sidelines on the long side on the NASDAQ. And I'm going to show this. Long-term breadth is still positive on the NASDAQ. So I would want to get confirmations back above that weekly unfair low to get long. And if we have a breadth turn negative on the long-term weekly and then we stay below our weekly unfair lows at 4120, that's going to be pretty damning, technically speaking, for the NASDAQ in general. But the inflection points right now, even on a short-term basis, just want to give these out so you guys have these in your head. unfair lows on the 240 at 41.02, and then we got that 41.20 number. So if we can kind of clear all these things and get back above 41.20, I think you're going to have some long opportunities there. I'm not so convinced that this market's going to sell off right now, and the S&Ps are trying to hang in there on the long-term profiles, and that's just the way I'm looking at it. Let's take a look at the Treasuries really quick. As you know, I've been a big fan of being long Treasury instruments and using the profiles to leverage that trade up. Here's the recent highs on the 10-year. This is the March contract. We're trading above profiles. Don't see a lot of reasons to go short this thing right now. And the only way I could even fathom going short the Treasuries, believe it or not, is to get back down below 127. So we're kind of up here, and breakouts above 127, 29, 128 are going to, in my opinion, have to be bought. But again, I think the market, stock market that is, could migrate north a little bit here. So the notes could kind of move sideways for a little bit based on that. And if the market does sell off and get below those weekly unfair lows on the S&Ps, the 10-year could move north, and then therefore breakouts above 128, in my opinion, would have to be bought. So let's take a look at gold. This has really been, almost... You kind of got the setup of setups here, fundamentally speaking and technically speaking, and gold just didn't want to get out of its own way, and that to me really is pretty damning for the longs. But gold is a very difficult instrument to trade sometimes, and we're sitting kind of, you could look at it without all the fundamental news out there. You could look at it that gold's sitting on the launching pad here, but it seems like if they settle out this Russian thing at all, this may just kind of fall apart. So not real happy about the way gold's acting from the long side here. Somebody's asking what gave me the sell signal in October dial-wise, how negative was the weekly to give the sell? If you wait too long, the cat spat out the bag, so to speak. Yeah, that's a really, really good question, Rip. We got about a minute left here before we go into another break, and I'm going to pull that back up, and we're going to kind of have this preloaded, and we're going to go back to the S&Ps, and we're going to kind of talk about some crossovers here. And I'm going to pull up the weekly chart, and we're going to kind of take the middle ground out here, and we're going to look at this October 17th, October 24th during that week. That was our weekly crossover. And are you talking about going long, the situation where we started switching gears from going short to going long? I'm just going to assume that's a yes. And here's our daily. Okay, so let me kill that. And there's that October 17th, October 20th. That was a weekend. So as we crossed over here, sometimes, I'm going to go back to our S&Ps here just to pull up an S&P chart just to kind of be able to exemplify on the days that we're going to peg here for talking about the breadth and the hopefully the power of that as I see it. We're going to be right back, folks. I hear the music, and we'll get into that for the last 5 minutes and hopefully fully explain that as best we can. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Yeah, I hear what you're saying. The cat may be out of the bag sometimes before these things or after these things cross over as far as breadth goes. So let's just kind of go over that a little bit. There's September 19th. I put up the spiders for this example purpose because the spiders are going to be a continuous kind of contract where the volume doesn't trail off as the March S&P 500 contract, futures contract, more than likely would kind of, not a lot of people are trading the March S&P contract this past summer, or so again, here's September 19th, and as you can see that we kind of had a almost regular market conditions, I would call it. We had all-time highs there, but September 19th, there's September 19th, and where's my breath here? And on September 19th, just going to get this going here. There is October 17th. There's September 19th. So This is the weekly, and the breadth started turning negative literally on all-time highs on our long term. Now, I want to go to our daily for a second. Kill that and come over here. Just kind of. There's our September 17th. There's our September 19th. There's our September 22nd. So 19th to 22nd, we had daily and weekly breadth turn negative, and we had a really decent pullback. I know you guys remember that, into October 17th, October 20th. So the weeklies actually had turned negative before the dailies, which was really, really weird at that point. But they pretty much coincided, Rip, around that 19th, 22nd area, okay, if you can see that. So a lot of times, the cat's not going to be out of the bag, and sometimes these crossovers actually forecast what's probably going to happen. And remember the crux of the whole thing, which is balance and imbalance. Balance and imbalance, all right? So we will be more imbalanced towards the downside or more imbalanced as a whole towards the upside. And that, to me, is pretty hard to argue with, actually, from what I've worked with over the last 10, 15 years with market profile in general. And this is one of the neatest things I think that we've ever come out with, and it's a very useful tool for me. And we use it now, just so you know, and this is that December 9th, December 10th. And I know that was a little bit late, but it was kind of cool. This is our daily again, but it's kind of cool as I look at the chart here. This was a little late. There's a 9th, there's a 10th, but we had coincidentally broken below profiles at the same time that happened, which kind of gave you a lot more confirmation to get short here and trade into either weekly unfair lows based on the daily crossover or new weekly unfair lows on the current profile that we have that we just talked about in the March contract at 1968. So it's not a perfect scenario, but we've done back testing back into 2003. And if you've been watching this show, Rip, we've been kind of looking at dates, picking them out every once in a while and talking about, oh, God, look at the breadth changed here, and then here's the sell-off. From 2003 to, when we started back looking at the back testing recently, it made beat time the amount of points that the S&P had gone up in that time between not being on the right side of the marketplace based on breadth alone. The market climbed a lot. That was back into 2009. We'll get into this more tomorrow, folks. Thanks for joining us. Steve Rhodes is next. Hang in there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.